Hello, today we're going to be taking a look at the Q3 results for Coca-Cola and come up with a fair value calculation for them. As you can see, their EPS grew by 9%. We have their net revenue that grew by 8%. You can come over here to the Coca-Cola Investor website and you can find this under the financial results. They have the balance sheet, the cash flow, all this stuff that you can look at. As you can see here, you can look right here, the net income compared to the same quarter last year. You can look at the depreciation, stock-based compensation expenses, all that kind of shit. It's how they come up with certain numbers. Issuing of debt, payment of debt, all that stuff is going to be right here in the cash flow statement. You can have the income statement. You can compare it to all the quarters and see how they're doing. Then the balance sheet, of course. So you can get all of this straight from the Coca-Cola website. If you want to look at more, I would come over here to our website here, MicroTrends, that we like to use. Shares outstanding did decrease, not by much, from 4341. Of course, this is in millions to 4339. So that's something to look at. EPS here, as you can see, it was up 8%, 2.48. Net income, it was an 8% increase to 10.772 over the last 12 trailing months. Their revenue has increased by 6%. That's something that we calculated the last time that we did a valuation for Coca-Cola. But for the quarter ending this time, it was up 8%. So that's something to keep in mind too. We could calculate it both ways to see what we come up with so we don't get caught left in the dust if Coca-Cola is going to be valued at 8% going forward, especially if they bring in those numbers again. As you can see, the assets, they did increase by 5%. The cash on hand increased by 16.75%, so that's a good thing. Their long-term debt decreased by 3%, and their total liabilities increased by 2%. But you have long-term debt declining by 3%, but your cash on hand increasing by 16%, and your assets increasing by 5%. I think it's okay if all your liabilities grow by 2%. So Coca-Cola, as of course, is in a good position. I think someone told me that Coca-Cola, the only country that they're not in is North Korea. I've never checked to see if that's true. It probably is, but that's an interesting thing. Of course, we're going to look at their free cash flow. As you can see here, over the last 12 months, it's 7,974. If you look here, it increased from there. It was about an 8% increase. So that's about right in line with their revenue growth. So they're doing a good job with their cash. That's why I did. Coca-Cola is saying that they're going to have 9.5 billion in free cash flow, which is similar to last year, but I'm increasing by 8% from their last year to this amount to do a calculation for them, because it's looking like they're already going to be ahead of last year. So we might as well get a jump on that by increasing it by 8% by what the free cash flow is currently going by. You go here, 8% growth rate, 2% perpetuity, discount rate of 8%. For 4,339,000,000 shares, we're going to have a discounted cash flow price of $64.57. And then if you give yourself a 10% discount rate, we're going to come to $58.12, which is still under what Coca-Cola is currently trading at. If we come to our dividend discount model, it's going to be the same as last time. We're increasing it to 1.91, which is a 4% increase from what they're currently paying. We're going to keep the growth rate at 4%, a discount rate of 8%. We're going to come to $49.66. Our Benjamin Graham EPS, we're going to do 2.48, 8% growth rate, 4% corporate bond rate, PE of no growth 20, since they currently trade at a 22 PE ratio, which would bring us to an intrinsic value of $54.78, which is very similar to where they're currently trading at right now. If we come to the DCF calculator and we only grow by 6%, it's going to drop our discounted cash flow of no discount, $55.34, and then a 10% discount rate of $49.80. So this is right around the current trading value for Coca-Cola currently. That's something to keep in mind. If you do want to come to our aggressive calculator, let's go ahead and do that. We haven't used this one in a while. Coca-Cola would be a good one to use this for. So we're just going to go ahead and put in the same numbers from the last one. 10,377. Oops. 10,377. we'll do a 6% growth rate. Discount rate 10%. Shares outstanding 4339. 4339. So this is something that we'll calculate here. We'll go to their cash on hand, as we have already done. We've done their cash on hand. Where was it? Okay, I'll just have to bring it up myself. So their cash on hand 15435. So this is something that you can always calculate in there too, 15435. And then their total debt, where would we get that? 34176. 34176. So as you can see, we're using the 10%. Let's go 8%, just like the other one. Okay, so as you can see here, if you calculate their cash on hand and debt, it would bring us to a discounted cash flow price of $6.10. Without calculating the debt and the cash on hand, it would be $70.42. So then we're going to be discounting from this one, which would be $63.38, a 15% discount rate, $59.86. And our aggressive calculator says a 20% discount rate is $56.33. So that's with a 6% growth rate, which is currently right around where they're at. They're between like 6 to 8. We don't really know yet. It's been changing. If you do put it at that 8% growth rate, as you can see, it changes our numbers here, and a 20% discount rate would be $68.31. This is something that some people like to do, is be aggressive with their calculations. I like to be conservative, so I would probably use this one with the 6% and stay at the $55.34. But if they are going to continue to grow at that 8% that we've talked about and that we're currently seeing, then it does raise our price here a little bit. Plus, you're going to want to play premium for a company like Coca-Cola. They're a great company. As you can see, they killed it with earnings. You can come over here to the investor overview. As you can see, 8% to 9% organic revenues. And then their free cash flow. See, this is what I was talking about, the $9.5 billion. They're being conservative. It shows you all kinds of things, like where the growth is coming from and where their brands are standing, like all kinds of stuff. This is something you want to look at in the investor overview and some of their plans and what they're doing for diversity, and then their drinks and zero campaign and healthy alternatives and all this other stuff, and how they're going to be recycling and reusing and becoming sustainable, all that stuff while saving money and helping the consumer. As you can see, last 5 years, 7% organic growth on average. Free cash flow, 14% the last 5 years. And as you can see, their EPS is growing at basically 6% on average over the last 5 years. So if I was going to buy Coca-Cola, as you can see, using 8%, I would probably go with the $58.12 to give myself a 10% discount rate. But I am comfortable buying Coca-Cola at $55. I've already established this in the last video, and I'm going to keep my price target for them at $55 and below. I'm not giving myself much margin of safety with Coca-Cola, and that's fine, because I just want to own great companies that are going to grow their dividends and have a safe part of my portfolio. There'll always be a growth part of my portfolio, and that's a whole different story with such companies like, probably Google. I currently like PayPal, but yeah, thank you. Have a good day.